Yeah, it's like doubling down,
Huh.
right? It's like in poker where you just double, or in blackjack you double down, right? So that's risky, definitely.
So that is the second thing.
That is the second thing. In F&O, this is equity buying in F&O. Then there is the intraday, which you buy index options. That is the most riskiest because it's very volatile. And every week you lose money. If you win every week, or you lose every week.
What is that intraday index? Can you just break it down? Like,
Sure.
Imagine you're talking to your son who has just turned 10 years old.
Oh, so don't do it if I ask. But yeah, I'll tell you what to do. So we have Bank Nifty and Nifty options. Okay, these are indexes. Bank Nifty is the banking index. Nifty is our Indian index. So every week there is
For the audience here, bank index is all the bank companies
all
of
the
India
banking companies,
combined in one index.
One index.
Nifty 50 is all the top 50 companies of India combined in one index. These are the most popular indexes in India.
Yes, most traded indexes. We had 2 at one point, and
So think of it like a mutual fund which has all of these companies in one.
Yes,
that is what an index is.
That is what an index is. Now, what the rule is that every month they'll have 4 option expiries, and I'll explain what this is, right? So what they say is Nifty is, let's say, at 23,000, 24,000 today. The next option is you have to bet or guess in the next week what will Nifty be. Can you do it?
So Nifty is 24,000 today.
Next week, Thursday, what will it be?
I have to guess.
Guess. Will it be above 24,000, below 24,000, or at 24,000?
This is the game.
That is the game. In short, I'm explaining. So if I say that Nifty is going to be above 24,000, then I buy a 24,000 call option today. And if it goes up by 200 points, I make 200 points profit. But if it goes down, I lose. Now, till the last day of that week, you don't know what is going to happen. Some war happens, falls down, you're finished.
Oh, okay.
So yeah, that is why it's a little riskier. Whereas in stocks, it's not like that. Stocks, you have 1 month to play the game. So in stocks, they say today, if one stock is at 100 rupees, what will it be at the end of the month? So you have 4 weeks for that game to play out. So it can go down, it can come up, right? Those things happen.
So in indices like Bank Nifty and Nifty 50, I have a 1 week time to play this guesswork.
Yes.
Whether it will go above this number or below this number or same number.
Yes.
Whereas in individual stocks, if I'm doing for Reliance or ITC or whatever, then I have 1 month.
Monthly contracts, they're called. So Nifty also has 1 week, 2 week, 3 week, 4 week. But most of them play 1 week because that's the highest chance of return you can get.
Okay.
So that is why most people lose money, which is the intraday buying and selling, because it's too volatile. If it goes down, it'll go down today, right? Budget day, it fell down, screwed, right?
Have you lost money?
I have lost money. In fact, on the budget day, I lost money.
How much did you lose?
I think in 15 minutes, I lost 6 lakhs.
Okay. Yeah. Can you walk us through what happened?
I'll tell you. I had lost 5% of my capital that day. Okay. So I'd invested a good amount. And this was late in the night. I was in US at that point. And I said budget is usually an opportunity day because it's very volatile. It goes up and goes down a lot.
Correct.
So I remember the market fell on the... So sorry, this was election day, not budget day. Okay. Election day, my bad. So election day, the market fell. It fell to a point where I said, now it can't fall more. Let me buy. Now I'm guessing that it'll go up. So I bought the option and saying it'll go up in a positive note. It fell more. Now, obviously, I'm in loss, but I didn't cut it. I bought more, saying it'll go up from here. I bought more. It kept going down.
Okay.
Now, obviously, next day it went up, but by then I was minus 6 lakhs. Now
it's the mindset.
Now, do I take a minus 6 lakh loss and say, dude, I'm done, let's cut it? Or do I play the next day? But if it goes down again next day, this minus 6 would have been minus 10. Obviously, I don't have that kind of guts. I was down 5% on my capital, which is very bad because you're always down max 1-2%.
Correct.
So that is where greed took over my logic. And it happens even now, right?
So you exited?
I exited. I took 6 lakh loss and exited.
But next day it actually went up?
Yeah, but I would have recovered 6 lakhs only. Okay. I would have not made money. But because my risk management was at fault, if I had cut my position at 1-2 lakhs, it would have not affected me. I would have slept peacefully. That whole night I slept in a very bad way.
Okay. 6 lakhs lost in one day.
It took me 1 month to recover that. It took me 1 month to recover that because after election it was a little slow. And then I got so scared that I just started doing equity buying, normal equity buying, no leverage. And it took me 1 month to recover 5%.
No, actually there's this saying, right? Like let's say you have 100 rupees.
Yeah.
And let's say you have a 50% loss.
Yeah.
100 rupees become 50 rupees. Now to make 50 rupees back to 100 rupees, it's not 50% growth. No. It's 100% growth.
Exactly.
So it's much harder to recover money than to lose money. Yeah, losing money is very easy.
That's why capital becomes a problem after a point, right? When I had 30 lakhs, it was easier to take decisions. Now when I have, let's say 1 crore or 2 crore of capital, I'm very scared to invest too much. So automatically you become a very conservative investor. Now I can't go all in, take huge positions because I'll be wiped out tomorrow. So in the market, I always believe that you should last.
Yeah.
So you lose today, live to fight another day. Market will give you hundreds of opportunities in life. Don't go all in today. You can't become a crorepati tomorrow, overnight. It is not possible. You will lose it also in the same speed.
So now that we've covered the dark side,
Yeah.
now let's talk about the positives.
Okay.
Tell me what has been some of your best investments in the stock market, which has given you multi-bagger return.
In the past?
Yeah, in the past.
Okay. So I'll tell you. So last year, I made a lot of money in one sector, which was the defense sector and the railway sector. This is something I picked up much earlier. So I do this thing where I read a lot. Okay. So I was reading the manifesto.
You do this thing called read a lot.
Yeah, I do this thing called reading a lot. By the way, you'll be shocked because most people don't read in the market. They follow people and they invest according to that. So I'm saying I actually do the grunt work, right? Now I started reading the manifestos of the parties, which is something that people don't do. So I read the BJP manifesto.
What is manifesto?
So when they come into power, like when BJP came into power, they actually give you a manifesto that if I come into power, these are the things I will do.
Okay.
So I always track smart money. Where is the money going? Where is the money flowing?
Okay.
So BJP was very vocally saying money is going to go into these 3-4 sectors. I'll give you an example. Right? I think last year, we had a massive budget. Let's say we had 100 rupees of budget in defense. They said out of 100 rupees, I think 80 rupees would go just in marine and air, which was 2 companies. I don't want to name the companies, but 80% of the defense budget was just going into these 2 things. Now, there was only 2 companies in this space, which have to win. So, obviously, the day this news came out, the market went up, these stocks went up by 5%, but it's not over. So, I bought it at that point. It went up by 70-80% in a year.
Wow.
Right? Because I don't believe you're too late to the party. Because
in 1 year, it went 70-80%.
Much more it's gone. I exited at that point.
I think defense alone grew by 160%.
Yes,
right?
it went up much more. But I said, no, I don't like greed too much. If it goes up too much, I start trimming my positions. Valuations did get a little messy at that point, right? Public sector companies going up so much was too much. The second company I made money was actually a food startup. I think this is something that everyone would know. But in hindsight, it was a food startup. So I don't
invest like a food delivery startup?
Food delivery startup. So I have a rule that I never invest in IPOs. Because in IPO, it's a greed market. So I wait for the IPOs to get over. Let the greedy guys go out, sell their listing day gains. Let it fall down a little bit. If it doesn't fall, great. But if it falls down, even better. So I waited. I tracked it. It fell. And then I started looking at a lot of interviews of that person, the CEO of that company. And he said, next quarter, we're going to be profitable. Now, obviously, I don't believe what people say because startup founders sometimes are true and false.
Correct.
I waited. The next quarter, he gave a very small result, but it was positive. I said, okay, now this guy's on a mission. Because sometimes startup founders, when they go like that, they just do it, right?
Correct.
I agree to that. I said, okay, let me take a bet. So I invested in that company. That gave me approximately 80% returns in the last 1 year.
80%?
Yeah, and even today, I keep investing in that company.
Okay.
Yeah, because he increased the fees. So I see this every quarter, he's adding something in the top line, which increases both the revenue and the profit. So even now he added something called platform fees. Now that's automatically going to come in the next revenue. It's so obvious. So people were crying in the market. Everyone was crying about them increasing it by 6 rupees. I was like 6 rupees into last 3 months, into number of orders, into order growth equals to, wow, free revenue coming in the next quarter results.
Right.
So now I automatically know if the price is now overvalued or undervalued.
That's the power of, once you become a monopoly or a duopoly in a certain thing, then you just control the market.
Yeah, exactly.
And then you just, add whatever kinds of revenues you want easily because it's become a platform. Everybody is using it. Everybody is addicted to it. And now you just can mint money after
You can just add 2 rupees screw you fees and the market will go up.
Right.
That's how it is.
That's the beauty of it.
Yeah.
So Shashank, now that you've given these 2 examples, now this is in hindsight.
Yes.
Now for the people watching here, there are almost more than 6,000 stocks, right? 6,000, 7,000 stocks
Easily.
in the Indian market.
Easily.
Now, how many stocks are in your portfolio?
15.
50 stocks.
15
stocks in
Not
your
more,
portfolio. 15. So out of 6,000 stocks, if you had to give me a mental working model as to how do I sort of filter out the stocks that I need to invest in, what is that step-by-step methodology?
Okay. So first thing I'll tell you is, don't try to catch every rocket in the market. Every day something is going up. You cannot catch everything. So that is the first realization. Because I've seen a lot of people, when they invest in 10, 15 stocks, then they'll be like, I'll take that also. I'll take that also. By the time you realize what you've done, you have 50, 70 stocks in your portfolio and you're diversified a lot. Now, how I choose my 15 stocks is I dissect them into inevitable sectors. I call this inevitable sectors.
Inevitable sectors.
Inevitable sectors.
What does that mean?
What does this mean? That whatever happens tomorrow, this is going to happen. This will happen. For example, will we move from 5G to 6G to 7G? Has to happen. Will we move to green energy? Has to happen. Electric vehicles? Have to happen. Electric vehicles I've been talking about since 2021 before Tata came out with their thing, right? I said, aaj nahi to kal it has to happen. So why not play it? A data center today has to happen. It's not a big theme today, but it will happen in the future.
AI also has to happen.
AI has started now, right? And you see big IT companies coming into this AI workforce. So I look at first inevitable sectors. Then I look at who is going to win in these inevitable sectors, right? So this does not depend on government at all. This only depends on the future of